All right, welcome everybody. It is July 10th, Thursday. Live trading with Income Navigator here. Igor in the house as well. Uh, yeah, my songs always have a little something to do with something. Who knows? There, but a little Iron Maiden to get you going for the day. Run to the hills. I don't know, we have to run, but I would maybe walk slowly. Anyway, so let's get going. We're rocking and rolling here. And oh, well, we play that as well. So we can, yeah, we can DJ it up all day long, but you got to be able to take my music. So, all right, let's get into it. Let's look at some charts. Let's look at the market profile. Let's see what's out there. See if we can come up with some trade ideas. It's been a little tougher finding, I think, really good trade ideas here at these levels in the markets, but there's a trade to be made somewhere. You just got to be able to look around. And right now, I'm trying to avoid as much as possible some individual stocks. I only have three individual stocks on right now: UNH, Tesla, and MicroStrategy or Strategy now. Those are the only three in the trading account. Probably three more than I really like to have. If you want to call IBIT, SPY, TLT, and QQQ, those are ETFs, so I don't really count those as much since they're more diversified a bit. Maybe IBIT is not as diversified. All right, let's get into it. Let's take a look. Let's find what we can to trade out there. Lots of ideas. If you have questions, pop them in chat. We'll certainly try to answer those. Like I said, I'm here. Igor's here. You can ask questions of either one of us, or one of us will give you an answer on things. Let's rock through it. Let's go. Let's switch to the weekly, daily charts, so I kind of like these because I get a sense of longer term, shorter term. Let me get off video so you don't have to see that. Uh, as a question here, 112 bull call in ES since we are at all-time highs. Yeah, let's look at that as well. So let's just jump into the futures first and see what we can see. As you can see, and just another up day here in the market. I mean, this has just been a crazy up move since June 23rd, where we started at roughly, 59.66 all the way to 63.30, 63.22, something like that right now. It's been a pretty gigantic move if you really put a little tape measure on that thing. I mean, this move here has been a 6% move uh, in the last 12 trading sessions. So 6% in 12 trading sessions, uh, just pretty much straight up. Been a huge move. This V-shaped rally has more than exceeded any expectations out there. We're we're now underneath the Bollinger Band on the daily, so as you can see, which is the red line, and then the white is the 3 ATR. I mean, we're right at those, but we're just setting new all-time highs pretty much on a daily basis right now. I think what I'm watching the most is RSI, which is at 71.35 here on ES. I've just, I mean, just like Tuesday, I'm pretty much in just a holding pattern here. If you're in, great. And we are in it. We've got our 112 trades, of which the naked puts on the 112s in ES. I got one up 80% in 24 days and one up 46% in 10 days. And then we have the 120-day naked put strategy, which is up 25% in 9 days. I mean, these fantastic moves here. And I'll still keep entering those, but is there anything else that we can trade? Yeah, while I've been hesitant, we're in it. We're not like out of the market at all. I've just been hesitant to pour more money into ES here, but that's not been the greatest move either since we've been moving higher. So if you're going to do something, I think you have to do something that gives you a little bit of defined risk. But one of the questions was, can I do a 112 trade in here? Uh, I think you can. Uh, you've got obviously you're trading at highs on RSI on the daily and pretty much the weekly. So it's not the best probability play when it comes to that, but it doesn't mean if you've got, if you've got your stops and you're willing to hold yourself on those, I think it's fine to take a look at it. It's just not the high probability play. And I look at, I put the video out the other day on those 5 strategies. I don't know if I have that handy here or not, that I put out, but 5 things that, as a consistent trader that you want to be involved in. And for me, it's looking at some of these trades, and you want to put on trades, diversify by strategy, diversify by date, days to expiration, and you can diversify by underlying as well. Any of those 3 work. It's just, if you don't have a lot in ES and you want to put something on, it's not it's not the worst thing. It's certainly bullish, but at some point we got to have at least some sort of a pullback to the 21. Now we keep saying that, and every day we go up another 0.5% or something like that. So it's not the best move, in my opinion, if you're looking at the strategies to try to put something bullish on in ES here. It's just not the best risk reward. However, if you feel that the market can continue to go up, which it certainly can. We're at overbought, but we know the market can also stay overbought for lengthy periods of time. But we've really been overbought since the day we actually made the move back on June 30th. If you look at the RSI level here, you've really been trading in overbought territory now for those 12 trading sessions, and the market just keeps going higher. So remembering the framework for trading success that I put out there for you is number 1, trade the edge, not the outcome. What does that mean? It means we're not really in the prediction business. We're in the probability business. Write that down if you don't have it written down somewhere. Write down you're in the probability business. And I want to put on winning trades over time that are high probability trades, managing my risk, let the math do the work. So give yourself the best chance to be successful here. And I think that means look at the probabilities, look at the strategies, make sure that they're working in your favor. And I just don't see ES giving me an edge to the upside. If you're in it, like we are, we just keep making money. So we're going to keep making money, but I don't know if I want to put new stuff on. Question, why isn't a 112 on SPY the best probability? Sure, you can pull back into the trap. The trap is never the goal, though. Remember, the trap is a bonus. The tail is the goal. But if you think we pull back, I think, like I said, I don't think you can't trade it, but I think you got to be smart on it. This particular line here, which was your previous resistance level that we broke through pretty easily, I think you have to look for support somewhere in here. So if we did put a 112 on, then I would want to have my trap and my naked puts definitely below this level, and probably below, or right around the 50 EMA, the 3 ATR, the Bollinger Band, somewhere around this 5,900, 5,930 level. So we'll look at a trade. We'll look at a trade out there. But I just think, a 112 is fine because, and Time Merchant poked it in there, anything with no upside risk is good ideas. I just want to give myself a better chance to be successful on a pullback, but if you think the market's going to continue and that's your thesis, just look at the underlying. MACD is rolling over. Okay, it's been falling for 4 days. Okay, volume kind of steady, fell for a couple days, popped up on the one selling day, and then it's kind of just been fair. So volume's fair. RSI overbought and stochastic momentum overbought. it just doesn't give me warm and fuzzies. Doesn't mean don't trade it. And we can certainly look at a trade that would make some sense, maybe down in here on ES. I will continue campaign trading. Uh, I don't try to time the market uh, on the campaign trades. They're back tested. They work well. Uh, I would love to have a pullback before Monday before I have to put a new one on. But we'll put it on and we'll just manage the trade. All right, let's move on to oil. Oil's been a great trade opportunity in here. I still think oil is one of the best trading opportunities. I think it is a great strangle trade right here. So I think oil gives you a good strangle trade. I think it gives you a good 112 trade. You could probably put a J lizard on. Okay. And if you wanted to trade ES2, like I said, define your risk, put something on. I know in the members trades, Time Merchant I know is putting out a lot of the put broken wing butterflies as well. Check it out. Maybe that's an area because you're defining your risk unless it's unbalanced. But if you want to put a butterfly on, some of those things uh, are good opportunity trades for you. I like oil. I think oil is a good spot right in here. I think there's decent support down here around this 65 level. Stochastic momentum's coming up. RSI was building until today. I think you're good with a 112 or a strangle, either one of them. I think if we are trying to put trades on, that's where I would be trading. I think that gives you the best probabilities right now to be successful. All right, let's keep moving. Gold, also a nice trade. Gold's in a serious uptrend, as you can see by the weekly chart on the left. So pretty good uptrend on gold here. And then all of a sudden, now in this consolidation range, we've had these before. Okay. I'll draw it out here for you. Okay. So we've had periods of consolidation on gold before, just like we're in right now. Yeah. Top of the box, bottom of the box. Top of the box, now not quite as low. In here, this is a bit of a flag pattern as well. I think you've got to look to break through the top of this and then you really got something going. But I don't think it would be a problem at all right now to continue putting on, I think 112 trades. I don't think in gold, again, you want to limit your upside. So you don't want risk to the upside. You want to have really no risk to the upside if these things start to take off. So I think gold is a 112, but it's also, I think, a nice setup for a strangle. It's right in the middle of this range. It's right between the 21 and the 50 on the daily. I like it in here. So I think gold's a great strangle opportunity. I think you just keep riding these things until you can't. But right now, probability wise, if we go back to that trade of trade the edge, not the outcome, if you're looking at trades, sell when you have the best opportunities to be successful in here, and you let the math do the work. And I think you can let these charts really set up the trades for you pretty well. All right, in here bonds as well, ZB or TLT or any of those trade opportunities. I think bonds are a perfect strangle opportunity as well. So I think strangles right now are a great opportunity on many of these underlyings that are not in the ES or the S&P or stocks or any of those things. I think you look at oil, gold, and bonds as great strangle opportunities. Our TLT trades now up 42% in just 16 days. I tried to get out yesterday. I just haven't gotten filled on TLT, so it hasn't been easy to get out, but we're still sitting there pretty. If I got out, I'd probably look to put a new one on. I think you can just keep putting on bond trades right now. Can bonds drop a little bit more? Sure, but I think these lows of the year down here are good opportunities for support, and I think you can get yourself nicely wide enough in here to let these work. All right, copper. Yeah, no. So I'm not jumping into copper here. However, one thing you can consider on copper, and again, I'm not going to do it in here. It depends on your risk tolerance. It's a trade. Okay. Not every trade is going to be a winner, but what's the probabilities that copper on this spike is a bit overbought? Well, RSI is overbought daily and weekly, just like ES, but it can stay overbought for a period of time. That was a huge spike up through the 3 ATR. You're above the Bollinger Bands, which are both climbing, trying to keep you inside of them. But I think if you wanted a trade opportunity, you could consider a call credit spread. I'm probably not doing that because I just don't know that that gives me the best chance to be successful. But what is copper's IVR? Um, right now it's at 56. So copper's at a 56 IV rank. That's pretty volatile. You could probably get decently away on a call credit spread on copper. Again, how do you feel lucky? Maybe something around you can get really, really far away on copper and put some nice looking trades on. Why? It does set up fairly decently around the 6.3, which would be like a 17 to 20 delta, doing like a 5/100ths wide spread. You can take in $400 on $1,200 in margin. That's a pretty nice looking trade setup, and you're well outside of these if you think there. So I'm looking at the 6.3, 6.35. Nick did a 6, so Nick's a little tighter. He's got the higher risk tolerance than me. But yeah, 32 delta there. I mean, you did a wide one. Holy cow. Um, but I think those are not bad. I'm more chicken. But even at like a 6.2, 6.25, I mean, you're taking in $213 on $500, 545 in margin. It's not bad. And if you want to widen that out, you certainly can. Uh, this is not a bad idea. As long as you put stops in place and as long as we don't blow way through those, I think the majority of the big move might be in. We can still continue to move higher on it. I think that's your risk, but maybe a copper call credit spread, not a bad idea. I thought it was not a great idea yesterday, but I'd probably look at the 47-day expiration. You could look at the 18-day on it as well. For me, I'd probably go out just a little bit more to like the 47, but it's not bad. All right, let's keep on rolling. So there's copper, silver. Eh, it's trying to break through. You've got a bit of an ascending triangle here. I think silver doesn't doesn't explode like copper, although it can, and you can see that. But we've had this nice consolidation area here after the recent move. Okay. For the most part, you've had this big move up, consolidation, kind of like a bull. Uh, Not like a bull flag, not exactly the same, but nice move up, consolidation, now getting ready to break out. Silver could be next on the move out there. All right, let's see if we keep. I'm trying to maintain chat a bit here. We'll get all your stuff in here. RTY has been lagging, but it's still doing pretty well. Now it's not at new highs, but it's basically in that overbought territory as well. It's to me the same thing as like an ES, something along those lines. Same thing as NQ, which is at new highs. I just think we got to get a break at some point. I just don't know when that break is, and the longer you wait, the more difficult it'll be. The Aussie dollar potential strangle opportunity in here. Also a potential like 112 if that sets up. I don't really know how that'll set up on there. Let's just rock and roll through some stocks. Nice consolidation. So Amazon keeps doing these. It's a bit of a cup and handle, but Amazon keeps doing these areas where it moves up, consolidates. Okay. Moves up, consolidates again. Okay. That was not good. Here. So, and moves up, consolidates. I mean, we can go on and on with these, and now it's doing it again. So now you've got another consolidation area here after breaking, the resistance level that you had. Now you're consolidating again. It seems to just trade in these boxes, and then it makes its move to the upside. This is not the worst spot, in my opinion, uh, to do something in Amazon. We called this out uh, on Tuesday a bit. Uh, I think Amazon's not in a bad spot to place some trades on if you want to trade, sell naked puts, something along those lines. Nvidia, it just keeps cranking. 4 trillion market cap. It's gone. I can't chase it for me. If that's something you like, then fine, but I just cannot. I can't bring myself to want to trade that here at these levels. Very overbought level. Hood, we talked about this. I think Hood's going to 100. I think Hood's going past 100. It's consolidating in here. It might be trying to give you a little bit of an opportunity after this really big move. It is overbought right now. Okay, so it's overbought. I'd be very cautious. I'd use something defined here. If you break through this, I think this is an absolute good opportunity play from a like a broken wing butterfly perspective. I think Hood is a potential candidate for a good broken wing butterfly. It's overbought. Okay, I don't want to risk a lot. I don't really want to risk the downside. If it pulls back, I'll get naked puts on whatever in Hood if we get to pull back to here. If not, right now, I think broken wing butterflies for me are an opportunity. Palantir consolidating as well. Take this off. Uh, I think this was the opportunity to do something here. It made its move out of there. It is consolidating. I'd love to see something back down here. On any dip, I think you can get in, but this is not overdone on the weekly chart. Uh, so I'm sorry, not overdone on the daily chart. It's getting a little overbought here on the weekly. So I think there's more upside on Palantir to go. If you want to trade a breakout range or something along those lines, I think this is what we have to look at here. We failed there today. Again, a broken wing butterfly might be an opportunity on Palantir to keep trading some of these things as we move through. Tesla, I still think Tesla hangs in there. I think it's at an opportunity area here. I really think that this is a really good strangle opportunity on Tesla. Taking a look here, RSI is kind of dead in the middle. You're sitting here right at the 50 and 21 on both the daily and the weekly. You're, right at the anchored VWAPs. Yeah, it could sell off more. It could move more. I think this is not the worst place to sell a strangle on Tesla. So if I'm doing something on Tesla right now, it's probably a strangle. If you want to do a defined risk like a put credit spread, you can just manage your trade on it. I think the risk is probably more. I don't know if it's more to the upside or not here. Right now, the risk is probably more to the downside underneath these anchor VWAP. So if we can't get above this, we may continue to roll over and see Tesla falling. But I think there's a floor below Tesla at some point that you can get in. So start to look there. Okay. But yep, got earnings coming up on Tesla. So everything's got earnings coming up. So you just got to pay attention uh, to what you're doing. But a strangle may not be the worst trade. I just want to be out before earnings. So short term. Meta consolidating, not the worst. We got earnings coming up on all of this. Earnings is coming up on everybody, so you do have to pay some attention. Apple has been moving through this range. It stayed in this range. I think it's not the worst spot on Apple if you like Apple. I'm not the biggest Apple fan. I have 900 of their products. So I guess that makes me somewhat of a fan of the product, just not the stock for a long time. But nice consolidation here, getting ready to test the top. If it can break through here, you got an anchored VWAP above, you got this resistance level here. I think if this thing gets moving through here, you got earnings coming up. Okay, here. So earnings are up on the 31st with a bunch of other ones coming up that last week. Apple seems to do pretty well for the most part. Last earnings was not great. It set things off, and we had a good day. Then the next day, it started to sell off a bit. But uh, I think Apple's not bad. I think Google also not a bad opportunity here in this channel. It's at the bottom of the channel. I think if you're looking for opportunities, Google's another one. Microsoft not. Costco is a potential opportunity. It's been struggling a bit here. Um, I think a strangle on Costco is a good idea. I think a strangle on Hims is not a bad idea either. The jury's out. We've got a gap to fill. Okay. That gap might get filled on it, but with the Novo Nordisk pulling out, how does that affect overall profitability? I think nobody knows. Strangle opportunity. Earnings are a little ways off, but just keep an eye on earnings. I think JP Morgan, I think this is an opportunity. The pullback here, you got earnings coming up, so I think you have to just probably sit it out here. But I think if you want to define your risk and throw something at it, the bounce off the 21 EMA, I think this is an opportunity for JP Morgan and financials. AMD is cooking along pretty nicely. Probably we'll wait on that one to settle down. SoFi, way overbought. We're in it. Just stay in it. I'm not adding. The Mags, Magnificent Seven, is consolidating in here. It's a little bit lofty, but still has some opportunities. I love Uber. You guys know this is one of my favorites. We come back down and retest this level. That was previous resistance somewhere in here. If we come down and retest that, I'm going to go back into Uber some more. Netflix, I think this is potentially an opportunity, but earnings are coming up. So I think you just got to hold off just because of earnings. Now, you don't have that same issue on Walmart, but it is in a pretty steady downtrend. But you could also call this a symmetrical triangle. If it breaks to one side or the other, uh, that's the move to look at right now. If I'm looking at the weekly, MACD is falling, RSI is falling, stochastic momentum is falling, so things aren't great on the weekly chart. From a momentum standpoint, the momentum is not higher. We cannot seem to get higher highs. We can seem to we're actually getting lower highs and some lower lows going in here. And then all the momentum right now is down on the daily. I just am holding off on this one. If we can hold this support and maybe move higher, but you're within 95, and what's it at right now? 96. You're a point and a half away from triggering a bearish PSAR signal as well. While you're watching your MACD fall, your RSI fall, I'm staying out of that one. All right. If there's any other stocks you want to take a quick peek at, let me know. If not, let's move on to some trades here. Berkshire Hathaway just kind of struggling down here a bit. Not really sure what's causing that, except the fact that Apple is not doing a whole lot of anything, and uh, Coca-Cola is doing fair at best. Boeing is on the move. Huge orders came in. This thing really took off, broke through. You had an ascending triangle breakout yesterday. This you could see it coming. This was probably the trade to get in there. It's already gone. ARM's another one on this pullback. And you got earnings coming up, so I think you have to watch it a bit. But you pull back to the 21. I like ARM as a company. I think this consolidation is not bad. If we hit the 50, I'm definitely probably interested in getting in on that thing. All right, let's go to UNH. Okay. I really, really like this thing. Even though I hate this company, I like the stock here. But this company is a monster cash generating tool. They think they're not doing anything wrong. The government somewhat disagrees. We'll see. It's just been consolidating here. To me, it's the gift that keeps on giving. I keep using that phrase on it. I love this. I love these trades. In fact, I think it's time to almost pull off one of our. We've got two naked puts and a put credit spread working. One's up 50%, 51%, one's up 27, another one's up 29%. And then we've got a poor man's covered call on this thing as well, because I believe long term this thing continues to edge higher. And I think this is a great opportunity now to be selling premium against it. In the lazy trader account, which is the longer term one, we do have a poor man's covered call, standard poor man's covered call on this thing. We actually took profits today on the covered call and rolled out to next week. Uh, the underlying is up like 1%, but we've been making money selling the covered calls on it. I think it's an interesting play in here. Uh, if you feel comfortable with it, it's a pretty interesting poor man's covered call or income poor man's covered call trade. I've got some friends that are traders that are massively invested in this thing right here, believing that this thing is a 450 plus stock uh, down the road, and that this was probably the generational buying opportunity on UNH. So we'll keep trading it in here, but I do like it. All right, and then we have a gap to fill, so maybe this particular gap does get filled, and then obviously there's massive gaps way above it. Uh, but we'll keep an eye on this one. But I would be looking at UNH. There's a question I think in here on UNH, was there not? Maybe I answered it, maybe I didn't. Didn't somebody post something about UNH? I don't know. If I missed it, just let me know. I can go back on it, but I'd continue to be selling naked puts or put credit spreads in here on UNH. In fact, if I take one off, I'll put another one on. I'm just opportunity trading it right now. All right, there's that. Reddit, nice pullback as another opportunity play in here. And then CME, I think this is also, if you've got uh, if you're looking for a potential poor man covered call, I think CME is interesting as a trade. IV is decent, but and it does have decent options out there. The spreads are fairly wide, so that's something you have to be aware of on CME. But there's no reason for CME to not keep going up with trading expanding out there. Just look at what's happening with Hood and others. Uh, I see no reasons that the CME doesn't continue to hold in there and edge higher over time, and any pullbacks to me opportunities. Another opportunity trade would be Labu, okay, which is the biotech. So I was looking at biotechs earlier today. Okay, so I look at the XBI, the biotech, starting to make a nice move here. Uh, you can call these a cup and handle. You can call it a larger cup in here. It's biotech has been on a pretty good tear. I don't like to trade individual biotech names, but biotech is doing pretty doggone well. And biotech, the XBI, um, is one of the best strangle opportunities um, out there, or at least something bullish on this move as well. And Labu is just another way to play it. This is a little bit more risky. This is a 3x trade. Take some of these off. Okay. So you got a 3x trade, uptrend line that's been lengthy. So we've been in this uptrend for quite some time now. Bouncing off of that, had a bit of a resistance level in here. Zipped through that thing yesterday. Uh, Not a bad spot. Again, riskier. It's a 3x leveraged ETF, something to take a look at out there. And then Tesla, I talked about doing something in Tesla earlier, like a strangle opportunity. You could also, and if you wanted to put credit spreads or something on, maybe look at TSLL as well. If you're going to do it, you get a little bit better, um, and depending on your account size, you might get a better return on this. So if you have a bullish thesis or you think this put credit spread's a good idea, then TSLL might be the better trade than Tesla. All right, lastly here, Bitcoin having a nice day today. It's been having a nice couple weeks, 3 weeks now. I love Bitcoin. You know I love Bitcoin. I'm very bullish on it. IBIT breaking out here. Uh, I think I think this has got to be something that's in your portfolio somewhere. I love them as a either an income poor man covered call, a standard poor man covered call. This thing's been driving our small account along with Hood and Mags. That drives the small account. That small account, by the way, is now up on the year. Okay, the small account is up, I think, 20% this year. Hang tight. It is up 20.4% on the year. S&P is up 7%, and our small account is up 20.1% for the year, having a phenomenal year. And three stocks in there, three holdings only: IBIT, Hood, and Mags. And all three of them are doing phenomenal. And it's really a income poor man covered call strategy that we're running on all of those, despite them going in the money constantly on the calls. We're just making boatloads on the underlying. So this stock, our small account's up over 20% on the year. Normally, too, I'm in the 120-day naked puts on MES, but I'm not in there right now. All right, and then MicroStrategy hitting the top of the Bollinger Band, but it's not overbought in here. I love it. It's one of my favorites to trade. We'll continue to trade that thing. We're doing fantastic on it in the main account. All right. Hopefully, there's a bunch of trade ideas for you today if you're looking for stuff. And we talked about drone stocks the other day. This was my number one pick. This one and KTOS and then ONDS. These are my favorite picks. It's had a decent little pullback, close to the 21. I don't think this is a bad spot to trade it. I'm not saying buy it necessarily in here. This one continues. So Kratos, whatever. Nice bounce off there. And then ONDS starting to break through. Nice uptrend line. This is a really low priced, so you can't really trade options on this thing. I've seen people doing it, but I wouldn't recommend it. It's very hard. But I mean, it's $1.95. I think it's a great opportunity. You could sell covered calls against it, buy the shares, sell covered calls, or just buy it and hold it and do nothing on it. Um, yeah, I mean, the question is, do you think getting into a poor man covered call for income on Tesla now? I don't know that I love this is a good spot price wise. I think the best is the strangle on Tesla because I think it can go lower. Would I do an income poor man covered call? Maybe, maybe, because the goal is to generate income. But what you don't want is you don't want the underlying dropping significantly on you. But I think over time you pay that off, so you really don't care about it. I just don't know. I guess it's probably okay. Uh, it's more risk for you, but it sets up well. Now let's take a quick look here. All right, so we went a little longer on some charts, but I think there's a lot of opportunities. What are you thinking about UNH going into earnings? Been a cash cow for premium selling. Last cycle dropped 50%. Could get volatile. Oh, on UNH. Yeah, I think you got to watch earnings here. I don't really want to hold too much more over earnings, but we have a little bit of time. Earnings are on the 29th. All right, so you've got a little over 2 weeks on it. So I would not want to be holding anything on UNH. So yeah, good question. I don't think I want to. I'm in it for a poor man's covered call. I'm fine with that because that's a long-term view, and I really don't care about earnings from a long-term perspective. From the trading perspective, I do not want to be holding naked puts or um, put credit spreads over earnings on this thing. I I don't think though that there's a lot of big downside, but I'm sure someone will remind me of that phrase if this thing tanks another 100 points. Uh, but a lot of news is already out, and I still think this is a cash generating machine. So I think earnings will be fine on it. But we'll see if it'll really be the announcements of what bad news is in there. And that's why I hate stocks. Okay. Let's go into the portfolio quickly here and take a look. We're having a good day today. Everything is doing pretty nicely. Uh, Overall, our oil 112 up 50% in 13 days. If you're in it, you could take it off. I mean, 50% in 13 days is just as good as 90 in, you know, 45 days or so. So uh, you can decide what to do on that. I'm not adding any trades there. Nothing to do here. Our naked puts are fine. Nothing to do with those things. They're fine. Our 120-day naked put, it's fine. Nothing to do there. Our gold trades, Jade Lizard's up 43%, 112's up 16% in 9 days. Nothing to do there. If I'm trading it, though, and you wanted to put something on, I think, again, Strangle or um, 112. Let's do both of them. So Strangle, I'll go out to about 90 days. If you want to go a little shorter, you can. The 69 is kind of enticing. I like 90 usually, but if we look at the 69 day on this thing, let's go to the 50 and somewhere around 86, 87. I'm just looking at, let's go 86 because that's a high open interest. So this would be a potential strangle opportunity. Boom. Okay, get off the screen. Okay, strangle opportunity. You can see there's skew to the upside. So oil is still skewed to the upside here, so which allows you to get further away for decent credit. Uh, I want to get these trades into the Discord as well, so hang tight. Tom's trade ideas. I got you guys. I got you. All right, hang on. All right. Zoom ideas from today. All right, so first one is a CL Strangle. Now, again, there's two different versions of this thing. We'll put this one on. We'll do this one, which is nice. You take $710 on 3161. Okay, that's a nice 22%. It fits everything that we're looking to do on that. So here is one Strangle trade opportunity. Boom, post that in the Discord. Okay, and this one would be a 69 DTE version. And then you could also look at a CL Strangle, and we could go out to the 98 DTE. And let's just tweak this thing, just make sure. So we can go a little bit wider. Still just monstrous skew on this thing. Geez, that 90's got a ton of interest on it. Let's just do the 90. What the heck? This is a pretty wide and a lot of room to the upside, but you're taking an 820 on $2,600. So it's even a better trade. 820 on $2,600, 31%. I really like it. But it's a longer term trade. It's going to take 40 days or so to get out of this thing. But I'll take 15% in 40 days or 45 days. I don't think that's a bad thing. So there's the two Strangles for oil that I would put on. If I was going to do a 112, We'll typically go about 60 days. So we'll use that same 69. Uh, Typical strangle or a typical 112 is the 25 delta long. I'll go one wide on oil, and then we'll go down to about the 7, 6, 7. We talked on oil. What was the support? Let's just use that quickly in here. There's a lot of support on this thing around 62, 59. So I think you could actually go 50 here on the shorts, and this would be what we would be looking at. Okay. Um, well, that's a 111. Hang on, hang on. Boom. I mean, you could do a 111 as well, but there's your 112. So the 112 on oil, I think that sets up really nicely. You're going to take in 570 bucks in the trap on $5,900 of margin. That is a 10% return on this thing in a 69 DTE trade. Uh, I think it's not bad. So CL 112, and this is at 69 DTE. All right. So there's another trade idea for you. And I like there's so many trades, guys, that are not involving stocks and risky stuff like that. You can trade oil and gold and bonds right now like crazy. So just because ES is like a little overbought, we're still in it. We're making plenty of money. But there's other underlyings out there to make plenty of money that are not overbought, that are great setups. Uh, so let's go gold. Like I said, strangle opportunity exists in gold. Let's go to the 77 days out and let's take a look at probably around this 30, geez, oh mackerel, 30.25 on gold. That is way, well below any three ATRs, Bollinger Band supports. So 30.25, pretty low on gold. I'd be more worried about gold to the upside. So let's see what the skew looks like. We'd be at 38.25 here if we get around that 6 delta-ish. So let's take a look. I wish they didn't make me have to uncheck these stupid things every time. So you can see the skew is to the upside because there's risk to the upside. So you can get further away on the upside. So it's not a exactly equilarly balanced trade here, but gold strangle. This one's at 77 DTE, taking in 1,400 bucks on 7,300, 1,480 on 7,340. I mean, 20% return here. You take half of that, you get 10% return in probably less than 40 days, maybe even a month on this thing. And gold IV is a little low, so it's not a perfect setup. From an IVR standpoint, 17.5, not the same as oil, which is at 23. Both are a little low, but like I said, I having over a 30 IVR is really nice and helpful, but it's not going to stop me from trading and playing the probabilities out there. All right, so there's gold on that. If you wanted to get into a 112 on gold, okay, we'd look right around probably around that 77 to 47 day mark. If we went to a 77 day, I think you got to go about 10 wide. And then we could sell something on gold. And these are way below where we need to be. So let's go to 30.25. Boom. Okay, hang tight. Stupid tasty trade. Wish it wouldn't make me have to uncheck everything for a new trade. All right, here you go. You can make your trap wider if you want to. You're taking in 1,300 bucks on $14,000 in gold. Not bad. It's expensive. So if your account's small, it's not going to be a great trade for you if you don't have the buying power on it, but you're getting almost 10% in 77 days. So the GC 112, and this is at 77 DTE. Okay. that is now in the Discord. So these are all in Discord under Tom's Trade Ideas. So you can find those under Tom's Resources. I usually post these from this here. All right, what else we got? What else do we want to model? So there's oil, there's gold, IBIT, okay, UNH. Again, I don't really want to do anything new. We'll do IBIT here. If you wanted to, okay, you can go 22 days out on UNH. I mean, you could still do like a 15 delta, you know, here. Oops. Okay, you can still sell like a put credit spread. This expires like 1 day after earnings, so most likely it would come off before earnings. You get an IV of 54, so it's a good setup trade. I'd want to be out before earnings. Okay, defined risk trade, taking in 118 bucks on 389. Right, so it sets up as a 30% trade in 22 days. I'd take it off at 50% winner, so you can make 15% in maybe a week or two. So a UNH put credit spread at 22 DTE and down at 265. I mean, that's a pretty good drop from here. It's almost like 15% below where we are. Doesn't mean we can't get there. That's why we define the risk. Okay. But this is trading. Okay. Playing the probabilities, letting the probabilities play out. So there's a UNH put credit spread. If I was going to look at something on Tesla, we talked about a strangle on Tesla, but we got earnings coming up on the 23rd, so we really don't have the opportunity right now on Tesla to do a strangle. If it wasn't earnings and we were doing a strangle, 71 days out, probably like the 215, we're at 303, and probably, gee, boy, this has some skew to it, and probably, geez, 480, you can go out 475, something like that. We could put on, this is the craziest looking thing of all time due to the skew on Tesla. What, hang tight. Okay. Look at the skew on Tesla on this sucker. Um, it's not bad though. 490 bucks on $2,600. Unfortunately, we have earnings, but as soon as earnings are over, I mean, the IV is not high on this thing, so there's not going to be a lot of IV decay after earnings. I think you just wait and see what they say after earnings. Probably some terrible thing that Elon will say, and it'll tank his stock. So you just wait for this thing to tank after earnings. I think I'd be very cautious doing anything in Tesla, but it's a nice 18% trade if you're interested in that. If you're doing a poor man's covered call, I'd go out long time. You love long time here. All right, September 18th, 26. I'd probably go, geez, on mackerel. You'd probably be looking at like the 210-ish, something like that. So selling the 210s, only got $30 of extrinsic, 31 bucks worth of extrinsic. Okay, so let's just do quick math on this thing. So stay with me. This is why we don't care if it goes to zero. So let's stay with me on this. So 210 is going to cost me $125 for this trade, which is 12,500 cash secured. It's only 8,400 with on margin. Okay, and I have $32 worth of extrinsic to pay off. If I was going to then write at the money weekly covered calls on this thing, I'm right now getting about $7. In fact, here's what I would do. What strike did we just, how old was that thing? What expiration did we look at? We just looked at what, the 435. Okay, 435 days out, okay, is 62 weeks. Okay, we have 62 weeks worth of Tesla premium selling. Okay, stay with me. 62 weeks with Tesla premium selling. Now, if I wanted to pay off the entire trade, which is $125, okay, $125 divided by 62 weeks, which means I need to generate $2 a week. Everybody with me? Just somebody just give me a yes so I know that I didn't lose anybody. But I paid 125 for the long, and I have 62 weeks to pay that off. If I make $2 of extrinsic value every single week for 62 weeks, this Tesla can go to zero and we don't lose a dime. If we make $4 of extrinsic a week times 62 weeks, that's $248. I paid 125, which means I will make a 100% return on Tesla, even if it goes all the way down to zero. As long as you make $4 of extrinsic every week. So Cujo here is even in agreement. So even Piper loves that. Okay. So I love this income poor man's covered call, but and to get $4, okay, of extrinsic, I can go in the money by, oh, in fact, I can go in the money even more. I can go basically to 292.5. So Tesla could actually drop $10 and I'd still make my $4 of extrinsic. And if Tesla does drop to that, I'll make $15, okay, which will pay off almost 10% of the longs. Okay, so you could be writing in the monies on Tesla. This is a beautiful trade. I kind of like this. All right, now you got me starting to think. It's just the wild card is earnings that if this thing tanks a ton, it's not going to look great on your P&L for a while, as long as you can keep selling $2 to $4 worth of extrinsic every single week. Okay, if you sell $4 every week, you're going to make 100% on this thing in 62 weeks. Even if Tesla goes to zero. If Tesla goes up at all, we make an unbelievable amount of money. So, Dan, when have earnings been good lately? You're exactly right. There is nothing probably good that's going to come out of Tesla, and Elon will say something more incredibly stupid that'll tank it even worse. Now, it's not just a car company. Okay? It is a robotics company. It's an energy company. It's a robo-taxi company. I think those things are worth $200 a share or better on Tesla. I don't think Tesla's going out of business anytime soon with those. I think they'll be just fine over the long term. All right. Does this make sense on this trade? I'm not going to post it right now because we're at the top of the hour. Um, I want to get a few more things in. But that Tesla trade is a beautiful trade, man. Let's get earnings out of the way so we can get into it because I really love that Tesla income poor man covered call, not a standard poor man covered call. Why? Because the standard poor man covered call, you're taking in a little bit of premium, but you're really relying on long-term appreciation. I'm not convinced that Tesla goes up long term, okay, or at least intermediate term. I think they go up long term. Okay, I think there's problems here. I think Elon needs to, rein himself in a bit on it. I think if they actually got a CEO, a good CEO in there, this thing would skyrocket to 400 tomorrow. But we'll see. But the income poor man cover call, totally different trade. We don't care about the underlying. All we care about is the extrinsic. And if you can sell in the money calls, still get your extrinsic and pay this thing off, make your 100%, and give yourself a $10 cushion every single week. That's a beautiful thing. I almost want to do it right now. It's all I can do to stay disciplined here and not do it. All right, let's do one more here. I'm probably getting carried away for you guys. Let's do IBIT. Somebody wanted to see IBIT. So trade idea for IBIT in here. Well, I love Bitcoin. So I just think IBIT sets itself up really nicely for just a standard poor man covered call. I don't like to trade it necessarily. I like to own it because I think this thing's going higher. So if I was trading this thing, I'm already in a poor man's covered call, but maybe I'd go out to this 554 days, go to my 80-ish delta, somewhere around this $45 strike. I'm going to pay somewhere around $27, give or take a few cents. Okay. My extrinsic on this is $8. Okay, which doesn't really matter for a standard poor man covered call because I don't know that I would do the in. I mean, you could do the in the money on anything. You could pick any stock on planet Earth, and just do the in the the income poor man covered call, and as long as you make your extrinsic, you don't care if the thing goes up or down. As long as it kind of goes up a little bit, you make even more, right? But if it goes to zero, you still make your money. All right, but this one I would probably buy this January 15th out. This is 554 days. 554 days is essentially 79 weeks. Okay. This is going to cost me 2,700 bucks. We'll round it up to $2,800. Okay. Uh, for IBIT. Not too expensive. Anybody can do this. And then I would just be writing standard calls on this thing would be based upon the standard poor man covered call trade philosophy, which means if it's above the 21, I'm going to go out closer to 15 to 20 delta. So I'd probably like something around this 68, right? So yeah, I would buy the under, I'd sell this. I'm getting about 50 cents. If I made 50 cents a week for 79 weeks, okay, it would pay $39.50. I paid 27 for this. So if Bitcoin goes to zero, even out of the money, we're doing well. Okay. But if we keep appreciating, I mean, this is essentially, a $4 move. This is almost like an 8% move for this thing to get hit. So I like IBIT here. I think you could sell standard covered calls on IBIT. All right. Does that make sense on it? So there's your IBIT trade. If you want me to post that thing somewhere, and you know what? I'll do it really, really, really fast. I'm just going to add, what did I do? The 45. Okay. This is the trade. Yeah, don't worry about the graph. Um, worry about the strikes. So this is your IBIT standard poor man covered call setup. IBIT standard PMCC. Okay, so that's in the Discord now too. You can see that one. If you know, I'll do the Tesla one later for you. Anything else? Yeah, with my 2 million shares, I could do a standard covered call. You're right. I could do a covered call and retire on that thing with my 2 million shares. All right, beautiful. Guys, anything else? ZB Strangle, we want to do one? Why not? Let's go ZB. Let's go Strangle. We're going to go out 78 days. We're going to drop down to about 104. And on ZB, okay, the bottom on this thing was like 111. Okay, so we're down here at 104. Lots of open interest down there. Then to the upside, we'll go 125 on the upside. This is what we would be doing. Here's the setup on it. We're going to take in $391 on 1,700. That's a beautiful return. 391 on 1,774, 22% return. So you'd make 11% in probably about 40 days or so, give or take. I mean, obviously, if you lose, you lose. But giving yourself the probabilities, this has a 90% probability of profit. So ZB Strangle at 78 DTE. Boom, there it is. All right, I think that's a lot. Um, I'm not a wheel guy, Matt, so you could, you can, you can wheel IBIT. If you want to go out like 30 days, and I don't know where you want to wheel it at. I'd probably be at this 59. Would you own it at 59? I mean, on IBIT, I'd probably own it higher than that. So, because I really like it right now. But 59 is a great support level. 57, 58 is a support level. Do I think bond vigilantes have chilled out? No, I think they're lurking. Dan, I think bond vigilantes are lurking. I think they want to push. Uh, I think they want to push bonds down, but I think the Fed's getting ready to start cutting. The pressure for the Fed to cut is mounting, mounting, mounting. I still think there's a shot in July, but for sure in September, and probably two cuts this year, which I think that will help that as well. All right, so this would be if I was wheeling IBIT, I think 59 is the target level for me. That's where I see good support, bottom of the Bollinger Band, just below the 50 EMA. It's been a support level. I'd be selling this 59. It's not a bad trade. Um, you're making 88 bucks on 2042. Okay, it's 4% in 29 days. Beautiful. Just keep doing that. And then if you get assigned, then write those covered calls. So if you want to wheel it, go ahead. To me, I prefer the poor man covered call over the wheel because I don't like owning stock. I would rather own the leaps where I have more leverage on the longs. If I think something's good, I want to own the leap, not the stock, because it's less expensive, especially with the PM account. It's less expensive. I'm going to get a better return on my calls. I'm going to get just a better return on the trade. All right, that's a lot, guys. Let's get out of here. Uh, there you go. We're up nicely. Markets are up on the day. Everything we got is up. Tesla here, and we just got this naked put that we entered a bit ago. It's fine. Nothing to do. Nothing to close. Nothing to do. The only thing I thought about closing was this naked put here, but I don't have another one to put on, so let's just be a little greedy because of earnings coming up. I think we'll just let this thing cook for a little bit. This TLT strangle, I've had an order in at 26. It's now at 25, and I still can't get filled on the stupid thing. I would like that TLT to come off. I'll put a ZB on. I was okay like owning shares of TLT, but I didn't want it. All right, guys, let's get out of here. Long session today. Lots of trade ideas, a bunch of trade strategies. Let's go rock and roll. Have a great rest of your day. See ya.